What's going on, guys? It's Bandit FX, and today I'm going to be covering how I like to trade ranges. Obviously, there is a right way and a wrong way to do this, and most people say that trading ranges will cause you to lose money, which is true if you aren't really familiar on how to do it or if you go into it without a game plan. Uh, let's start off with talking about this chart right here. So this is the gold 4-hour chart. This is basically actually what I just did a Asian session breakdown on not too long ago. But price is ranging. There's a strong resistance, a strong support. So, and there's actually two other levels here actually as well. Down here at 1762 and 1794. So. Um, let's talk about why most people lose when trading ranges. Um, Typically, what people like to do when they trade a range is they try to anticipate the breakout. They're trying to buy on an open volume candle. It doesn't close outside of the range, and they're expecting price to continue up. So, or down, just to continue in the direction outside of the range and continue the breakout. Um, Now, the reason why you can't really enter on an open volume candle when price is starting to leave a range is because price has ranged for X amount of time and could not break out of that level for so long that why would the candle that, for example, right here, why would this candle that is coming up to this level, think about when this candle's open, this is big body green candle, we're all the way up at the top here. This candle couldn't break out of the range. This candle couldn't break out of the range. None of these could break out of the range. Um, why would this be the candle to do it? And, you really can't make that judgment. That's a very risky judgment to make. Can you be right? Yes, absolutely. But more often than not, price is going to close back in that range and you're going to get stopped out and take an unnecessary loss. So, when you're trading a range, you guys kind of have to like flip your mentality, instead of looking for the breakout, trying to trade the breakout, trying to, anticipate price to leave that level, just, it's very, very simple. Sell the top and buy the bottom versus trying to sell the bottom and anticipate the breakout or buying the top to anticipate the breakout to the upside. Um, Other than the fact that people are anticipating the breakout without a confirmation, um, people trade very, very, or try to trade sloppy ranges. And what I mean by sloppy ranges is not the price action in the range. This is not what I'm talking about. What I'm talking about is the levels on the tops and the bottoms aren't very clear. See how this chart has a very, very clear range. For the most part, let me just grab the marker real quick. Um, for the most part, price tends to stop right here in this area. This is the bottom of the range. Obviously, you have a couple outliers, and this was actually in the beginning. The range got tighter as time went on, but this was the initial sell-off. And if you guys haven't seen this zoomed out, let me do it for you so you guys have a better understanding of what just happened. So gold basically fell super, super hard, and this was basically just the pullback back up into this level. So let's talk about that one more time about the bottoms and how clean they are, the tops and the bottoms, how clean they are. So up here on the top of the range, this is very clean. We had this level, this rejection here, this rejection here, this rejection here. Now, obviously, you guys have these two outliers up here that did break up higher, but again, the first one was in the beginning on the buyback. Um, and then the second one was a fake out, which is totally okay. I mean, this no trading strategy is 100% bulletproof. There's no 100% accuracy. Um, However, if you count up the times that price respected this level versus not, you're going to see that you will have an overall higher win percentage. So let's see. We have two times to the upside that price broke above the top of the range, and we had one, two, three times where price actually broke below. Now, we're not even going to count the first one, and the reason we're not going to count the first one is because it wasn't a range at this point. We're not going to count the second one either because at the same time, it wasn't a range. Price had just came down, came up, and looked like it was breaking the low. It wasn't until right here where price actually came up. Actually, this one doesn't even count either. This is when the range began. So Up until this point, you wouldn't even be able to identify. Actually, delete this one too. So at this point, you really wouldn't even identify this as a range until we got to about here, and you start to see maybe the second bounce and, right here, okay, now we're ranging, after two bounces on each side, you can identify price is ranging, we're starting to range. It's getting very choppy in here. Um, Price really doesn't know whether it wants to go up or down. Um, 1, 2, 3, 4, 5, 6, 7, 8, 9. We have 9 bounces or so, and these are obviously you can count each individual wick, but I'm just talking overall candle body touches basically, um, or side by side candles to that level. So we do have a lot of touches on each side of each side of this range. Now, um, another problem that people have is trading a range that's too small. So this range is massive. It's a 4-hour range and it's 161, 162 pips. So there is plenty of room for a stop loss. There's plenty of room for a take profit level, and there is plenty of room to cover spreads, things like that. This is not a tight range by any means. Um, so this, you're not going to want to do is try to trade a 10 pip range. That's way too small. But you have a 1.5 pip spread, and you slipped a little bit. So say your entry is 2 pips from where you actually entered. You know what I mean? Now you're only going to be able to secure 8 pips, and with your stop loss, it's really not the most idealistic trade. But 160 pip range is more than enough. I would say, any range that's bigger than 30 pips, 30 pips or more is ideal to be able to trade. Now, obviously the bigger the range is, like the higher the time frame the range is, the tighter your stop loss is going to be able to be, because you're going to have a much higher profit potential as far as distance between your entry and your full take profit target. Now what I mean by that is, let's just mark this out. Say we're going to take a long position down here, just in a general area of where these all have touched, right? Now if your stop loss is even at 40 pips at this point, you're talking about 160 pip range. Even at a 40 pip stop loss, assuming the price is going to come back to the top of the range, which it has 3 times already, um, you're still looking at almost a 4R, a 3.8R trade, which this is a very loose stop loss. This is like more than enough profit potential. So, like trying to secure a 1-to-1 in here is literally not even halfway up the range. So this is more than enough. This is very tradable. This range is completely tradable. Um, Versus something that's only 10 to 20 pips, where the bottoms really aren't that clean. You have wicks that are all different heights. These typically are all in the same spot. But if you had, let me just draw an example. If we had a wick that came up to here, and this wick came up to here, things like that, and then another one that only made it here, you really don't have a clean range. It's like, where's the top? Is the top up here, or is the top up here? But since we can identify that price had only broke above this level once after the initial, sell off and buyback, we only broke up above this level one time. So, other than that, we have 1, 2, 3, 4. I mean, you could even call it 5. 5 touches off the top of this resistance right here at 1790, where price could not break back above. So chances are this is going to be the top. Now, in addition to anticipating the breakout with no confirmation, the range being too sloppy, the range being too small, one of the other key factors is people are trading ranges at the wrong time. Now, what do I mean by the wrong time? I'm not talking about a specific session, but I am talking about a specific time of the month. For example, with gold. This week, the reason that gold is ranging so hard is because there is NFP and unemployment on Friday. Okay, this is Tuesday. We're coming into Tuesday. It's the end of Monday. We're coming into Tuesday. You can anticipate gold to range until Friday. And the reason for that being is because NFP pushes gold a lot. If you know anything about gold, if you've seen how NFP affects gold, NFP causes gold to fly. So when you know that, in anticipation of that move to happen, price starts ranging. Everyone is anticipating this move. Banks, institutions, whatever you want to call it. Everybody's anticipating NFP and what it's going to be, what's going to happen. So price goes sideways. So that's what I mean by timing, not necessarily what session of the day. Although, you know, depending on the pair, and obviously this is different for every pair, so I can't really go into detail, but depending on the pair, different currency pairs range at different times during the day. Typically for pound yen, during Asian session, price tends to range a lot. But in London and New York session, there are very, very strong impulse moves. Sometimes we get over 100 pip move during either of those sessions. So timing is also very important. So let's break down how to properly trade a range. You're going to want to buy support, sell resistance. Like I said before, sell the top, buy the bottom, contrary to trying to buy or sell the breakout. Your entries are going to want to only be when price touches these levels. You're not going to want to take entries if it's, price is coming close or it's in the middle of the range or if you see a support formed halfway through. Only when you come down to these levels are when you are taking your trades. And the reason for that being is you're going to have a much, much higher risk reward ratio. Like we just went over, let's just do it for the selling aspect because we went over the buys already. But assuming that this is our target down here at the bottom of the range and we are trying to sell here at the top of the range, even if you want to play this safe, right? And you're putting your stop loss above the highest wick that there ever was in this range, right? You still have over a 2R. Even, you know what? Let's move it higher than this. Still a 1.6R with a 93 pip stop loss. With something that is ranging like this, you can still get over a 1.5R on this trade. Now, me personally, I'm going to go for the higher risk reward. I'm going to see, okay, where has price stopped the majority of the time? Because I'm going to trade based off the majority of the time. Price has at least gone to this level 1, 2, 3, 4, 5 times. Price has gone to this level 5 times. So let's say this is my entry. I'm going to put my stop loss above most of the wicks, which would be right about here, 27.5 pip stop loss. At this point, we're looking at a little bit over a 5.5 risk reward ratio. This is an amazing trade to hit. 5.5 risk reward is an amazing trade. So rather than try to avoid ranges altogether, identify the ones that you can trade and take advantage of them because, something like this, especially with gold and NFP, you guys there are multiple trades in here. This is not just a one-time thing. When you come down to the bottom of the range, you can do the exact opposite and catch the move up. Because you just have to understand how the market works and what causes certain pairs to range, when do certain pairs range, how to identify certain aspects of a range on each individual pair. So another little bit more, I wouldn't even say advanced technique to this is to scale into your position. So say if you're worried about price coming up a little bit higher, instead of entering the full 100% risk right here, like basically your full position, enter a quarter of your risk right here and then a quarter up here. And then if price goes higher, another quarter. You know what I mean? That way you have overall less risk than you originally did, but you're getting a better entry if price continues in your favor. I mean, yes, you will get a better entry and a better profit potential, but when you're already hitting a 5.5R on a trade, I mean, it's not that much more beneficial. But if you guys are confident in doing that, if you're used to scaling into positions, you guys can totally do that. If you guys aren't comfortable with trading ranges, then either trade on demo or trade with a low risk. Trade half of your normal risk or a third of your normal risk until you get good at it, until you get comfortable with it, until you've back tested it and understand what to look for, to be able to trade ranges like this. But yeah, guys, that's pretty much it for trading ranges. It's very simple. You just have to identify when something is ranging, identify the key levels, just look at price. That's with analyzing anything, is looking at the price. What has happened here before? What is most likely to happen? You know, I can't sit here and look at you and tell you that, gold has been ranging for the last 5, 6 days in a row, that this next time it comes down, it's going to break out. You know what I mean? Like, I'm not magic. I'm not a fortune teller. I can't see the future. I can't tell you that it's going to break out. You know what I mean? Especially right before NFP. Why? Like, why? Like, it's not price is not going to break out. You know what I mean? Like, more than likely it's going to continue to range. So, that's just something to keep in mind as well. But let me know if you guys like this video. Leave a like, leave a comment. Let me know if you guys have traded ranges before and your experience with them. And if you haven't already, please subscribe. And once again, I'm going to leave my free Discord for Bandit FX in the description. Feel free to join. It's totally free. We cover New York, London, Asian, and crypto analysis. And we have the New York session live streams every morning at 6:30 a.m. Eastern time. So feel free to join and invite your friends. And once again, don't forget to subscribe. This is Bandit FX. I'll see you guys next time.